Good evening, Wizards. It feels good to be back on the charts after this erratic and very, very unfortunate scenario in the market. However, not unfortunate to the followers of the Wizard and the Wizard community. So, first of all, let's just start off with what's going on in the market and what's currently going on with the progress of the Wizard platform. So, the reason I've been a bit sporadic on the charts, pretty much seen as we've seen the drop from BTC, it gave me a bit of room to quickly focus on some other aspects behind the scenes of the Wizard platform. Now, I've been setting up in a new location right now for the remaining segment of this finalization of the platform. So I'm finally set up on my charting platform now. Going over the charts, besides the BTC chart here, we'll be going over BTC, LTC, XRP and Ether pretty much from scratch and having a little look at what the market is doing right now. So as you can see, we're currently lingering around that $7,122 region. Going over to the market cap today, painting a very different picture. Btc Dominance down from almost 60% down to 56.3%. As I did state, this was expected and it has finally unfolded. Although we have not seen the complete picture, I do believe with a daily candle closure like this, we could be leading up to a very early sign of a continuation to the original expected and anticipated target. So again, looking at days like this, it just goes to show the psychology behind the market participants during the euphoria of such bullish momentum. And this is why I was saying no margin trades, no long shorts, not even dollar cost averaging. It's not wise, because even if you were dollar cost averaging and you were looking to buy in at the peak of that bullish momentum, you would have been down just in one day 10% on that investment. Now, I know when it comes to long-term investing, it's all about riding through the waves, but that still means you have to be calculated. It doesn't mean you just continue buying every single second or every single minute or every time you see movement in the market. Even your dollar cost averaging, your buys, anything you're doing, even physical coin related, has to be calculated to a very specific extent. Because if we can avoid days like this, then by all means, let's do so. Because you could now gain an extra 10% profit should the market move back up. Or if not, you've gained yourself a 10% bonus of coins you can physically buy from this downside movement. So looking at this overall, the BTC dominance is slowly stabilizing back to that initial level. And I haven't even checked this yet, so we'll check this all together. It's good to see Binance back at 9th after being 22nd in the overall Bitcoin market dominance of the BTC trading. As you can see right now, USDT is still predominantly the major focus of BTC's volume right now, but with Binance back up exactly as I stated, once the Binance withdrawals were fully available, because remember the trading was then available, but the withdrawals were not. So people were too hesitant to really sell because there was no point, they could not get their crypto or their fiat out anyway. So Binance has now predominantly made its way back to the top 10, and it's just gone to show how impactful it's been with the return of the normal trading. It just goes to show the euphoria that occurs during the market during these crazy periods. And as I said, there was no real fundamental growth behind this current movement. It was mostly down to the fact that withdrawals and exchanges were pretty much limited. USDT was being printed in the masses and being used to pretty much prostitute BTC's pricing to an upside target. So going back to the prior breakdown videos and the prior Wizard Wednesdays, the first thing that was mentioned is, should we be closing? Even when we were up here, I said, even if we are closing on the weekly candle below this level, no matter how much it breaches, it could go all the way up to all-time highs and pull back here on the weekly. It has still not formed a new lower high or a new higher high. We have to wait for confirmation. It's funny how Friday, after 5 days of driving the market to the upside, we now have a major pullback from around $8,400 down to around $7,100 at the current time of recording. Again, all of these factors now confirm we could be seeing, even this level here could have been a major level of liquidity where trading was commencing. But should we even see a close below this 78.6 Fibonacci level, it just proves even further that price could just be spiking continuously throughout this region over the course of next week and then plummet down to our next downside target. So I'm hoping this has really cleared up a lot of confusion and a lot of hatred that has come my way in the past week. And it goes to show my intentions are absolutely pure. I'm not here to be a party pooper. I'm not here to protect my ego. And that's the beauty of it. Many people are messaging me saying, you know, your ego, you're just trying to protect your ego. No, I'm reading chart patterns, and it can be incredibly hard when you're enticed in that present moment to be trapped And by no means has this yet confirmed. The weekly candle may close back above here. We do not know yet. But all I know is we've seen the first stage of the expected pullback on the weekly. So looking at this now on a weekly time frame perspective, you've seen it here before as well. So this is a great example. You saw that spike. So look at this. A, B, the C, which was around the 61.8 to the 78.6. Look at where we closed. Down there. We spiked all the way through, just as we did there. We end up closing back below, bit of consolidation, and bang, all the way back down. So all I've really said and pretty much been trying to state is we've now retested those levels. We're now consolidating within this region, and we now have more reason than ever to believe we should at least be seeing a pullback to around $6,000, which was expected and anticipated anyway. So going over to the 4 hour right now, we have formed that nice new head and shoulders. Could be looking at a little pullback to this region as well of around $7,400 to take into consideration. A lot of head and shoulders forming on these charts right now, which are not all becoming valid, but many are showing their true colors. Even on a 15-minute scale, you can see many different small head and shoulders forming. So having a look at this, a little small level of consideration, we've now broken below that moving average. So on a 4 hour time frame in particular, a pullback up to this region and a few retests would be very valid. However, what's really causing some consolidation for me, if we just go to the day, no, let's go to the 4 hour. Let's have a look at the 4 hour and we look at this now. So we've seen a significant pullback. Granted, if we pull lower, we will have to invalidate this, but I am now being cautious of a potential pullback towards these regions here. Again, we've broken massively through a major level of support and resistance. We were, if I just leave that there where the 78.6 is and drag this down, we were consolidated besides a few false breakouts. What I said was we were not breaking through these levels. We saw the tap, but those candle closures are our biggest picture. The biggest downside and the biggest problem for many people who are not seeing success in the markets is because they're jumping into FOMO, they're believing everyone else, they're just jumping on that hype train, and they're not awaiting candle closures. We're living in the present, but we're not awaiting the present to confirm itself upon a candle closure. So looking at this now, we could easily be looking at a potential pullback, although for now, anything short term is looking more to the $7,400 region, especially as this 1 hour moving average just slowly brings its way lower. It's gone from acting as a key level of support to being broken, rejected as resistance, and this could potentially now be our guidance all the way down. So this is the special wizard moving average I'll be teaching you through the platform launch as well. As you can see, even on a 4 hour, a much more significant break, we have now been holding this level from support towards resistance. So looking at these Fibonacci extensions as well, looking at where they correlate, if you do remember, posted on Twitter a while back and in Telegram, BTC could be seeing at least a short-term break to $7,400. We saw that, it tapped, it broke, it retested and fell lower. Nice Fibonacci extensions here lining up with $6,600 and pretty much $6,100, although we can pretty much consider that a $6,000 rejection. The daily candle right now, yesterday's was the biggest telltale sign. It was the first bearish candle we've seen upon this huge momentum. Now, the only difference with this bearish candle was it was like this. It was just a straight rejection of that level. Not like this, not like this, not like this, which was a fairly small red candle. Although candles are purple, you can see this was a huge bearish rejection, a huge body signifying it was having absolutely none of that upside breakout just yet. Many rejections through. If you kept following these wicks, you would have FOMO'd in. We absolutely plummeted to the downside. So should this level hold right now, we could easily be seeing a potential retest of this region and a continuation to the downside. So again, a bit of a 50-50 level. It would be more wise if you caught the top versus trying to enter now. It's just not worth taking that risk. The reason being is if I remove this Fibonacci and switch over, remember with Fibonacci bouncing right now, this pair is moving beautifully in sync with the Fib pairs. So a wick to wick would show us a nice 78.6 retest. Pulling this down, you can also see regardless, we're still aligned. So we have to take into consideration daily candle closures around this level as well, which could aid, even if we do not see a breach above here, we could be looking at a potential pullback to these highs anyway. So going over to this weekly candle, let's just say by the end of the week, we actually managed to close. If I get rid of this, even if we close, let's sort this fib out. Even if we manage to close around this level here or even back above, we are still within this level of a lower high. So it is progressively forming its way, and even realistically, let's just be honest here, The wick itself didn't even breach the prior wick, showing me yet again there's just further confirmation this was just a euphoric rally for the time being. And I know, again, if you look at the 4 hour, you can obviously have that ideology, or even the daily, that it could just be a simple trend pullback and continuation. But we cannot ignore such a significant movement, and it's happened many times before. You see the pullback, huge pullback, it absolutely melts, continues like it's going to go higher, and dies all the way down again. This also goes to prove that it can break, reverse, pull up a little bit higher, as we've seen here. Could see a little pullback, another double top forming, and then we continue all the way back down. It's pretty much what's happening here, which is why I was saying we haven't seen any real bearish correction yet to give us a further confirmation. This does not confirm either way it's going to unfold, but it's most definitely putting it now in our favor of a bearish reversal. We have a trend line down here to take into consideration. We have $6,000. Even if we start hitting this $6,000 region, then we can potentially start calculating how it holds here to maybe predict a future bullish movement. But for now, looking at this weakness, looking at this pullback, all I can potentially see happening is a weekly candle closure, and then candles potentially testing this region again, or next week's candle driving up, testing this region, and then we begin our reversal once and for all. Taking into factor 1, 2, the missing third trendline retest, the long-term moving average. Everything was covered in the prior Wizard Wednesdays and the prior market analysis videos. So make sure you've checked those out, and make sure you have a good scroll through my Twitter feed, because this was covered way in advance. And arguably, I was probably the only person to really call this. So you can have a look around. I was getting a lot of hate for this, but it has pretty much come through. And it just goes to show you have to sometimes ride out the waves of backlash, because when the market is at its ultimate peak of happiness and excitement, we have to realize we're all in this market together. And I will not use my own personal investments or personal gain in the market to change my bias. We're all here and we all want that bull run ever so dearly. Believe me, nothing would make me happier than seeing a bull run, but we have to be level-headed. I would love to see a bull run and to make many millions in the process, but it really isn't as simple as just being euphoric and hoping on it and praying for it. We're not here for hope and faith. We're here to read the candlesticks and let those paint the real picture. So as of now, we have to be a bit cautious. Any potential upside movement short term, we're looking at 7,400, and if broken, straight back to that sweet spot of $7,800 to $8,000. Let's go over to LTC, have a little look at what's going on. As covered, we have to break $108 to confirm a new leg higher. Barely taps that level. Going over to the 1 hour here, we saw that nice consolidation, bang, straight reversals to the downside, dropping from $108 down to $86. And again, I have to stress this, just because these candles are moving massively, it does not take away from the movement of this move. Many people are saying it's only $1,000 drop. Well, guess what? Only a month or two ago, we would have been very grateful to have seen $1,000 movement in the span of 2 weeks, let alone in a single day. So actually, this is a pretty large move to be seeing unfold. And if you use the weekly candle as a bit of guidance, you've seen these rejections many times over. Huge spikes, candles continue a little bit more. Again, could be seeing a movement like this. Candle spikes higher, we breach a bit higher, breach up and slam. So there are a lot of factors to take into play. This does not really make it 100% certain for me just yet, but these 1 hour candles as well are painting a beautiful picture. And to be honest with you, I'm still going to stick to my overall understanding and belief we will be seeing $6,000. $7,000 breaks straight to $6,000. If $6,000 breaks, let's just have a little look at what will be unfolding upon a break like this. We are looking straight towards around $4,800 to the $3,000 region I covered. Now, if this Fibonacci level holds, we are going to at least $1,800 or $2,000. No matter what you believe, no matter what you say, the Fibonaccis have proven themselves almost 100% every single time on a weekly time frame. It seems crazy looking at it from a weekly and monthly perspective, but then again, looking at this here, when you zoom out on a monthly, it now makes even more sense than ever that you could be seeing another stall, another huge rally. It's now congesting, and it could just roll all the way over before hitting this level, peaking at maybe even $1,000 to test this high that I was telling you about. If we do hit this level and peak, the bull run begins from this level, and this is where I'll be FOMOing in myself hard. Dollar cost averaging, pay attention, do not jump in. Here, when you see this breaking out, of course in the moment you're thinking, oh my god, it's all green, how can I not buy now? It's just going to keep going higher. But if you can control yourself and restrain, and you may have seen the tweet about this as well, what will happen is when you're at that peak of buying at this moment, and then you actually pull away, you kind of take your finger off the trigger and you say, do you know what, I'm not going to buy, I'm going to be patient. Now that price has pulled back, you realize that temptation to buy has slightly gone away. It's actually diminished, because now you're thinking, well, hold on, maybe it is going to reverse. What happens next? What if it falls to 5,000 or 6,000? And that's the mentality you should have had before the candle even reached this peak anyway. You have to preempt these levels, and that's why it's very important to not note the color, but to note the regions we're trading at and the Fibonacci levels. 15-minute, although not very necessary. Let's have a look at that rejection there. Quick rejection, even on the 15-minute. Not a single break above the highlighted zone I had for you guys. Slammed down. We've now continued on our way. So looking pretty good, although I do not focus on these timelines and these time frames. Looking nice for a quick little upside retest, which is good to see. Going over to LTC now with that rejection. Again, that trend line there around $78. I did cover this as well. Nice potential trend line retest, which could aid a potential movement higher. And then again, if we do see a continuation, to be honest with you, even on BTC, let's just say worst case scenario, next week's candle breaks even higher. I still don't think that means we're going higher, to be honest with you. It just doesn't look logical. So LTC level headed, as I said, look at that closure. And let me just show you the importance of this Fibonacci that I had covered. Let's just do different scenarios once again. Even if we're doing the ABC from wick to wick, back below even the 61.8. When you cover this, let's show you cover this candle right now. Let's just say, oh, okay, let's block it like that. Let's say that candle doesn't exist right now, yeah? You cannot see that candle, and all you can see is green all the way up there. You're not even thinking about price ever closing back below these levels. But when you practice from a weekly time frame, the art of patience, you realize very quickly in a single swift movement, as I covered, it could take a day, it could even take a single hourly candle. You can be back below these regions. So we can't get ahead of ourselves until the weekly candle closes, but having a look at this is some serious level of precision. Body to wick precision yet again. Dragging this a little higher, it all falls into play and all the levels align regardless. And I'm still fixated on that $60 target. I just truly believe this is going to be unfolding in the due course of time. Again, paying attention, of course, to any upside targets. We are looking at a nice rally and an incline higher. Let's get rid of these fibs for now, keep it nice and clean. And again, these external trend lines. Again, if this taps and breaks, we're going to the next leg down of $60, an easy target, and potentially spiking down to this next trend line. So I will not give a precise pricing yet for that third and final trend line if we hit it. And that's because it depends where the candlestick is located. It can very well even end up taking another week and confluencing with a tap around $60 over here. But overall, we are looking at this around $68, easily covered, easily anticipated. We have $78 and of course 60 and beyond. So should we see this continue and this momentum break, for all we know, BTC is going to snap below and absolutely shatter expectations. So it's all about really just practicing some focus right now and focusing on that weekly candle closure, because if we start seeing weekly candle closures like this, we can await the next weekly candle to open, potentially tap these regions to retest again, and you can enter shorts with a very wide stop loss. If not, you found the nice regions, begin dollar cost averaging upon these pullbacks. This way, you know that you're still going to potentially suffer a little bit of a drawdown, which is completely expected when dollar cost averaging. But the beauty of it is you're also guaranteeing yourself you haven't lost an extra 10, 20, 30% by catching a lower pullback on that movement. Looking at these movements, guys. Let's go over here. Look at these movements today. XRP 11%, 11%. 12%, LTC 10%, 10%. You are saving yourself huge amounts, which in the long term on a bull run would make an absolutely significant difference. So paying attention to these levels, all eyes are still upon weekly candles. But for now, looking at this, nice rejection as well. We are at that support floor yet again. So if this breaks, we should see a very clean and sharp drop to our next downside targets. Going back to the weekly one final time. The wick rejection, this level here that I covered, wicks have been failing to break again and again. We tapped that level upon an upside breakout. 108 failed to break. We can now bring this down to show the significance of this level, to now correlate with these levels here. We now have a new upside potential resistance level upon a new movement. Looking at these weekly candles here as well, guys, when you see these huge wicks shooting upwards, you can see another week or two of attempts to test this region again. As many people will not be able to believe it, but I do believe if you start seeing breakouts here, the bulls will definitely switch bias and get out as soon as possible. You have to realize all these people that have been buying, if they see a little pullback here, they're willing to hold on. If you start breaking those final support thresholds, the bulls get out, they switch to bearish, and the bears just take over and dominate the market to the downside. XRP, another great example. Nice rejection on this moving average over here. Nice pullback. As stated, we didn't manage to break that level, 48 cents, so we did not tap 50 to 51 cents. I said upon a pullback and a hold of 44 cents, we pulled back on the 4 hour, going to the 1 hour. Let's get 44 cents up. Pulled back, rejected, slammed to the downside. And then we retested this new found level of support, touched it as resistance, and continued on our way down. I do see BTC pulling up potentially for the short term. We have a nice daily candle here. I do believe the daily candle could be closing around that 38 cents region, which would be nice, potentially providing another pullback before slamming back down to our projected targets of around 33 to 32 cents. And inevitably, should we see the BTC pullback, we are going to see that 27 cents and below region even further. A key level to take into consideration on XRP as well. Should we see the weekly candle close below this region, if you go back to the prior Wizard Wednesdays yet again and have a look at all the analysis, I said even when we were up here, in fact, I said we could potentially still be closing the week below this box, which would signify yet again another potential retest, another attempt to break higher, maybe even touching this trend line. Who knows? We'll have to see how the candle closes. But what followed from there was a very sharp and simple pullback, and closing back within this trading range I covered. Very obvious, we were just going to close back in. Euphoric pump. I've said before, how many times do we see XRP consolidate, break out for a week or two, and then completely reverse within a week later? It's the same principles. It's following the same move. A week of explosion, a week of consolidation and a bit of movement, bang, back down. Week of explosion, next week we're back down. Same occurs here. Moving average has been our absolute testimony every single time. We fell short of that trend line as well, which shows the sell orders may not have even wanted. The bears may not even want us to breach that 50 cents level just yet. And what does that do? High, lower high, moving down. We still have now potentially formed, if we close, another lower high. And where would that take us? To a very sharp downside movement. So 4 hour right now, could easily be retesting these levels again by all means necessary. 44 cents, dragging a nice little Fibonacci for a potential upside movement. Looking at these levels here, look at where they're correlating. The 33 cents pullback, moving even lower, 30 cents. We start tapping those levels, we are going even lower, potentially to 27 cents. So nice alignments here. As you can see, the fibs, should we see this closure, they're aligned nicely with our prior level of around 44 cents, give or take. So a nice upside spike potential occurring around this level as well. And all the pieces of the puzzle are finally coming together. And that's why the majority of this analysis this week and the prior week is being done off a weekly time frame, not the intradays, the weeklies, because right now all we're seeing is noise and we have to filter out that noise. It's absolutely essential. Ether, on the other hand, we are having to do this fresh right now because my charts have cleared for some reason. Having a look here, key level right there. Another key level right where we've rejected, precisely $280. Pulling back there, we've tapped this level. Bear with me a minute, you're going to like this. Lovely jubbly. The 61.8 is there, 78.6 there. We've pulled back below upon breaking out. Going to the daily, taps the level, pulled back. So we're at least looking potentially for a pullback on Ether to around $180, give or take. That should be a nice, easy downside target. However, weekly as well, closing on that moving average, looking very good right now. Crazy how we pull all the way up, precisely tap. By the way, the cruciality of precisely tapping a round number or a whole number like this is a very clear and key indicator that sell orders are here in anticipation. Price could not even breach this level by pretty much even 1 cent, which shows this is a premeditated movement once again, back below the trend line as well. Nice downside trend line here. Again, I've been covering these trend lines for a very long time. 1, 2, where's the third potential test? We can very easily still see those downside targets covered, even exceeding potentially these levels down here. Looking at this as well from a different bias, just to put into consideration. Should this be the final floor and we do see a pullback and a slam down, then we can begin preempting a potential reversal back to the upside. So this could even be an early sign, guys. You have to take this again by candle closures. This could be a very key and very early sign that even if we do not exceed these levels here, let's say we see a rapid pullback, especially for long-term investors. Moving average here, Fibonacci with the moving average and the trend line around $5,000, located just below around $4,300. We have our resistance trend line we've broken from and not retested, covered in the prior Wizard Wednesdays. Moving average 78.6, $4,000, potentially spike down to that trend line just below the sub $4,000 region, confirming the overall bias and the projection and the prediction. We could even be seeing the $3,000 zone yet again. Should we tap this level and hold? By all means, it's time to begin accumulating, and we are ready for our next upside movement. So we're not going to disregard breaking out higher ever again. Of course we will. It's granted. We are going to see another bull run again, and I do truly believe the bull run will actually unfold around May 2020 due to the BTC halving. I've already covered this anyway. I'm sure you guys know this, but right now we're seeing stability. So even the upside targets are not looking too promising for me right now. I wouldn't be surprised to see a weekly candle closure, even like this. We test around 7,400 to 500 and just slam. There are so many different factors that can come into play. So yes, you can cover many different scenarios in the market, and as long as you're not entering upon and executing upon FOMO or euphoria, you can be right many times over. So covering all these angles into consideration, we are nearing the level of closure right now. So the market overall as a whole is looking very promising to see the wizard bias come through, and this will be, to be honest with you guys, we are some of the only people in the market that have truly believed this to happen. I have not seen anyone else call this movement, and that's why I am pretty excited to see it happening, because no one else expected it. Everyone just kept saying buy. I'm seeing Twitter pages, the usual crypto cartoon altcoin moonboys who have hundreds of thousands of followers, just misleading the masses by saying buy, breakout, 250 broken, 700, whatever's broken. These people are just jumping on euphoria, and it's so dangerous to be misleading the masses like this. And it just makes me wonder how people with hundreds of thousands of followers on Twitter, for example, who are meant to be these crypto personalities, how are you misleading the masses like that? It just shows they're just jumping onto hype and they're not actually using logic or education. And what's crazy is the majority of these people are not educated in market analysis or even the crypto market. Many of these people just bought early, made some money, got lucky, and they simply now think they can time the market and know what they're doing. And it's just very dangerous. So please, I'm not saying do not go to anyone else. I'm not saying do not listen to anyone else. I'm not saying 100% listen to me, but please just be careful of what you're listening to. I'm trying so hard here to educate the people in the correct manner, and I'm hoping this is proving this in the best way possible. So for now, for the time being, just take those upsides into consideration. Weekly candles looking beautiful for a potential reversal. Whether you're margin trading, potential shorts could be occurring upon a weekly candle closure. If you want to catch some intraday moves off these levels I'm calling, potential upside spikes, please do so by all means. And of course, dollar cost averaging. Seeing pullbacks down to these regions, you'll be so grateful if you can catch those physical coin buys around this level versus up here, saving yourself a huge amount of money and making even more money when the bull run finally presents itself. So for now, let's see how this unfolds. Looking at up $200 to $180 on Ether as well. Should that commence realistically with that current level, BTC may not even reverse. We could even close bearish on this weekly candle, and it's hasta la vista pretty much from there onwards. So guys, sorry, it's been a bit of a delay over the past 24 hours, but I'm now back in this space. I'm ready to continuously update, whether that's on the laptop or the MacBook the desktop on the Mac. We are here to keep you updated and educated and knowledgeable and prepared in all events of market breakouts and reversals. So guys, hope you're having a good Friday so far, and hope you're getting prepared for the weekend, whether that's market analysis or just taking a break. Honestly, you should be taking some profits. It's definitely wise. You saw my half a Bitcoin withdrawal the other day, seeing that BTC spiked around that region. I took out my BTC profit straight away, 0.5 BTC, which pulling back down to here could potentially be worth half that in a potential week span of time. So make sure you're taking those profits, and that's what I'm saying. We're all enduring this market rides together. It's not here to prove people right or wrong. It's not here to get the ball run before the others, because we're all in this together. You have to realize that. As cringy as it sounds, we're all riding the bullish market, the bearish market. We're all here to make money, but we have to be logical at all times. So I truly hope this has helped, and I cannot wait to be providing more coverage throughout the course of the week and revealing some more teasers on the Wizard platform. I'll be dropping through another teaser shortly in the Telegram, and I cannot wait to start revealing promo videos coming very soon. So yes, looking forward to those as well. Guys, have a good Friday. I'll be seeing you in the Telegram shortly.